In the jungle of East Kalimantan, Borneo, a hole in the ground was valued at more than 6 billion Canadian dollars. The gold that justified that number did not exist, not a smaller deposit, not an honest find that got exaggerated. Nothing of economic interest was ever in the rock. The gold in the samples was real. It was simply put there by hand, after the drill came out of the ground. This is the autopsy of a fraud that turned fictional ounces into real pension losses, and then repriced the whole thing to 6 cents a share. At its peak in 1996, Bre-X Minerals was one of the most valuable gold companies in the world on paper. Roughly 40,000 investors held the stock. Ontario teachers, the Quebec Public Pension, and the Ontario Municipal Employees Fund all held large positions. The claimed deposit was pitched as potentially the largest in history. The company was a Calgary penny stock, founded in 1989 by a promoter named David Walsh, who had personally gone bankrupt only a few years earlier. In 1993, Bre-X acquired the Busang property in Borneo. The technical face of the operation was a Dutch-Canadian geologist, John Felderhoff, and his field man, a Filipino geologist named Michael de Guzman. Here is how the gold got into the samples. De Guzman and his crew took the crushed drill core and physically added gold to it before it went to the assay lab. First, alluvial gold, river gold panned and bought from local placer miners. Later, by some accounts, gold shaved from jewelry. By one widely cited estimate, the entire salting program cost around 61,000 United States dollars in local gold, spread over roughly 2.5 years. That is the asymmetry that defines this trade. Tens of thousands of dollars of input, $6 billion of paper output. The salt cost less than a rounding error on the fantasy. Standard practice is to split the core in half, assay one half, archive the other so a third party can retest it later. Bre-X did not do this. It crushed and prepared its entire sample before assay, keeping no independent duplicate. Destroying the physical evidence at the source is the single design flaw that let the fraud live for years. This is the forensic spine of the episode. Bre-X was the sole source of every assay number. There was no independent data feed. That means there was effectively no informed short interest. You cannot short a physical or thesis when the only evidence is withheld inside the fraudster's own shed. The price faced one-sided order flow the entire way up. Then reflexivity took over. Each new, higher reserve estimate re-rated the stock. A higher stock price pulled in more pension and index buying. More buying drew more analyst coverage. More coverage conferred more legitimacy, which made it easier to publish the next, larger estimate. The stock's own ascent became the evidence base for the story. Watch the reserve ladder climb, around 2 million ounces at first, then 30 million in 1995, 60 million in 1996, about 70 million by 1997, the last independent engineering estimate. Felderhoff publicly floated a potential of 200 million ounces, roughly 8% of the world's gold supply. That figure was never certified by anyone. It was promotion. The tell was in the metal itself. The gold in the cores was rounded and river-worn, alluvial placer gold. Busang's geology, if it hosted a real deposit, would produce angular, crystalline lode gold. The morphology of the gold was physically inconsistent with the deposit being claimed. The evidence of the fraud was sitting inside the fraud the whole time. The stock ran from under $1 Canadian to a split-adjusted peak of roughly $286 in May of 1996, after a 10-for-1 split. Peak market capitalization exceeded 6 billion Canadian dollars, a figure in Canadian, not United States dollars. The mania topped in 1996 and then drifted for months before the fraud actually broke. While the story inflated, insiders sold. Felderhoff disposed of roughly 84 million Canadian dollars of Bre-X stock in 1996, near the top. Walsh and his family sold tens of millions more. The people closest to the drill core were converting the paper into cash before anyone drilled a second hole. The fraud died because the deal to monetize it required an outsider to touch the actual rock. Under pressure from the Suharto regime, brokered by the president's crony, Bob Hassan, a joint venture was set in early 1997. Bre-X held about 45%. Freeport-McMoRan took roughly 15% as operator, and an operator drills its own holes. Freeport drilled twin holes, roughly a meter from Bre-X's own drill sites. On March 10, 1997, the results came back. Insignificant gold. Non-economic. The moment a second, honest sampling stream existed, the fraud had nowhere left to hide. That single independent hole is the entire story. 9 days later, on March 19, 1997, Michael de Guzman died, reportedly falling from a helicopter about 20 minutes into a flight to the Busang camp, where the Freeport team was waiting. His death was officially ruled a suicide. That ruling is genuinely disputed, and we will not assert it as fact. The body was recovered 4 days later, badly decomposed. It was identified by a thumbprint and a molar, then cremated without DNA testing. Reports noted the body had natural teeth, while de Guzman wore dentures. The identification was never forensically confirmed. Suicide, murder, or a faked death, on the record, it remains an open question. The repricing was brutal and fast because there was no leverage cascade to slow it down, just a story marking to its intrinsic value. On March 26, Freeport announced negligible gold publicly. On May 4, the independent auditor Strathcona confirmed the samples were salted. By May 7, the shares traded at 6 cents. Strathcona Mineral Services called the salting a fraud in its words, without precedent in the history of mining. 6 supervised twin holes found only trace gold and no economic interest. On May 9, 1997, Bre-X and its sister companies filed for bankruptcy protection. The $6 billion valuation was gone. Now the part that should bother a working trader. No one was ever criminally convicted of the largest mining fraud in history. The Royal Canadian Mounted Police closed its investigation in 1999 with no charges. David Walsh was never prosecuted. He died of a brain aneurysm in the Bahamas in June of 1998. The only enforcement action was an Ontario Securities Commission case against John Felderhoff, insider trading and misleading disclosure. After a marathon proceeding, he was acquitted on all counts in 2007. The court found the Crown never proved he knew about the salting. The victims recovered essentially nothing. The real payload was regulatory. Bre-X is the reason modern mineral disclosure exists. Canada's National Instrument 43-1 took effect on February 1, 2001. It requires that every public resource estimate be signed off by an independent qualified person, and it mandates chain of custody and quality controls on sampling and assays. Read what that rule actually does. It institutionalizes the exact chokepoint Bre-X bypassed. It forces a second, independent verification of the ore before the market is allowed to capitalize the first, dishonest one. The regulation is a direct patch on the precise structural gap the fraud exploited: sole-sourced, unverifiable assay data. So the lesson is not that Borneo hides liars or that gold makes people greedy. The mechanism is colder than that. The fraud was not undone by regulators, journalists, or conscience. It was undone by the arithmetic of a second, independent drill hole, and it survived for 18 months only because, until the deal forced one, no such hole was ever allowed to exist. This has been Capital Autopsy.